All right, well, let's focus on the auto sector now. The government has approved rupees 10,900 crore PM e-Drive scheme to push electric mobility. The scheme will be replacing the FAME 2. Abhishek Gaoshinde, the Deputy Vice President, Research at Sharekhan, who joins us on the show. Hi, Abhishek. Good morning and good to see you again. Well, tell us what is your reading of this new proposed scheme and how does it compare with the past one?
See, broadly, if you see that the overall allocation has been in line with the street estimates or whatever with the numbers the media reports have been quoting. And in terms of that 10,900 crore rupees, what has been allotted is similar to that of like 11,500 crore kind of allocation was there in the FAME 2 scheme. But what is different here is that this scheme is more diversified and taking account the new segments like ambulance and the e-truck segment. And given that in the previous scheme, around 85-86% of the fund was allocated for demand incentives. Compared to that, in this scheme, around 33-34% of the fund has been allocated for demand incentives. So it's and second thing is the PV segment has not got any kind of a mention in this scheme. Further, the major focus has been on the PV bus segments and overall you can say the CV segment, including the electric bus segment. Along with that scheme, that government has also approved this payment security mechanism scheme and allocated roughly 3,400 crore rupees. So what I find that this payment security mechanism scheme is more beneficial for the EMAS players or the electric bus players like GBM Auto, Ashok Leyland, Tata Motors, etc. Because earlier they were being some kind of hesitance to to participate in this EECL orders, but now when this payment security scheme would get placed, I think the participation from OEMs or the bus operators in the EECL orders or the EMAS scheme will increase going forward.
So there are three basic differences, Abhishek. So one, the outlay is slightly lower, 10,900 versus 11,500 in the prior scheme. The current scheme is more diversified. It covers electric charging stations, etc. And the third is it doesn't cover four-wheelers, right?
Yes. Yes.
Okay.
And the one thing which still requires the clarity that how much fund they will allocate for an individual product. So say, for example, in the EMPS scheme, the incentives of up to rupees 10,000 rupees or 50,000 for two-wheelers and up to 50,000 rupees for three-wheelers has been allocated. So that clarity is still to come out in the market.
So is it possible to quantify the discounts per vehicle compared to what it was? Because now it's more diversified, right? So there's going to be less money which goes necessarily for two-wheelers, three-wheelers, etc.
This is most likely, and further that in this particular scheme, they are targeting more number of vehicles compared to the previous scheme. So obviously the per unit incentives may come down from what has been offered earlier.
Abhishek, will this help revive sales at all at the margin? Are you building in some sort of recovery because they've really stagnated now?
What kind of a recovery are you saying?
For EVs, for two-wheeler EVs, do you think, are you seeing, because I mean last month was particularly bad and actually for the last many months, EV sales have stagnated. Penetration has been around that 5-6% kind of levels. So I'm just, will this help, and at the margin, how much?
See, one thing is now clear that the scheme has been would be in the market for next 2 years. Compared to that, earlier they were introduced this EMPS scheme for the 4 months and then extended for 2 months. So in that way, the OEMs and the customers both will get clarity. The month-on-month volatility has been seen because of the lumpiness in the volumes, because customers purchases the vehicles in a lumpiness in the last month of this when this earlier schemes got ended. So as we have seen a lumpiness in the March, and after that we have seen a kind of consolidation. So now that lumpiness would not be there. Second thing is that post this reduction in the incentives, most of the two-wheelers have also introduced products at a lower price point. Say, for example, earlier most of the players were focusing on the 3 kilowatt hour kind of a product. Now they are launching this 2 kilowatt hour kind of a product, or in the pricing in the range of around 1 lakh rupees, which is quite comparable to the existing ICs. So in that way, the positioning has been quite clear, and I think that adequate incentives have been offered for a certain period of time. At some point of time, this incentives will definitely get moderated, and EVs have to attract the customers on the basis of the utilities what they are offering. So things are going in that way only, and I think at the beginning of the introduction of all these policies, that was also aimed.
Yesterday, BMW cutting the guidance, Abhishek. How would you read the implications for the Indian listed players? Have you made any EPS cuts or changes?
See, we have to understand that why this BMW has cut down its EBIT margin guidance. It has cut down EBIT margin guidance from 8 to 10% to 6 to 7%, largely because of the two key issues. One is that it has got some issues with the integrated braking system, and because of that, it will have to incur a large warranty liability in a quarter 3 of this calendar year. And because of that, its EBIT margin in the quarter 3 would get impacted, and that would lead it to a cut down its EBIT margin guidance for the whole year. And the second thing, what it has said along with that is that because of this, its delivery schedule will get impacted, and it has been facing some volume growth constraints in the China region. So, overall volume guidance, earlier it has given a slightly increase than that of a quarter FY23, and now it is saying a slight reduction in the volumes compared to FY23. So it's a company-specific issue, largely with the BMW only. And given that the underlying assumptions for its peers, including JLR and all that, so JLR has also indicated for a 30 billion pound kind of a revenue for FY25 with around 8.5% kind of a margin. I think that would not get impacted directly because of this commentary came from the BMW. One thing is that both these players have a different kind of a customers, different kind of a products, and different kind of a competition in multiple geographies. And second thing is that this vendor issue which BMW is facing is not directly linked with any other player or any other player. So I don't think it would have a direct impact on its peers.
Noted that point. Thanks a lot, Abhishek, for joining in and in fact giving us your view. Wishing you a good day ahead. But it's 9:10, so let's get Sudarshan and Mitesh back in.